She just capsulized it right there. It's a matter of supply and demand. Plenty of supply for the airlines, just no demand for what they offer. A sign of this pandemic that is not letting go. Let's get the implications of all of this with our special guest, Liz Peek, here, of course, Fox News contributor, follows the markets and the economy closely, as well as Paul Dietrich. Liz, they may get their aid. We're talking about the airlines, and that they'll likely get something. I don't know how soon they'll get it. Not enough time to obviously hold off layoffs. But look at the airline industry for me. The stocks have been battered. They're well off their pre-pandemic levels. Will they ever get back to that?
Yeah, so the real problem, I think, for the airlines, Neil, is business travel. An awful lot of businesses have discovered that they can communicate with their clients and do business very happily from their basements, from their living rooms, whatever. They can, work remotely. The whole idea, if you sit down with 10 bankers or CEOs right now, they'll tell you that the whole idea of going out, spending a whole day to have a 20-minute meeting with a client on the West Coast, if you're in New York, for example, is a complete waste of time. And that's a real problem. I recently flew. This is, who would have thought this is a news item? I took a flight recently, and there were like 20 people on a big airplane. And I thought, wow, this can't possibly be making money. Obviously, it's losing money. But as a country, we can't afford to let our airlines, this is a major go under. I mean, this is a major infrastructure necessity. All countries have that obligation, if you will. So they have to be saved. And Neil, one other thought. This is a moment where every voter should be just saying, just go for the $25 billion. Why do we have to have a 2,100-page pork-laden bill? Why don't we just give the aid where it's needed and move on?
Well, don't hold your breath for that. Paul, how do you see this whole environment right now with the economy juxtaposed against the markets? Do you like what you're seeing? Do you see us coming out of this? What?
Well, I've been advising all of my clients to buckle up for a very volatile stock market through the end of the year. And I think the story is that there's a lot of good news, there's a lot of bad news, and there's a lot of unknowns. And this is the problem. The bad news is if we get the jobs numbers that we're expecting tomorrow, there's still going to be 10.7 million people unemployed who were employed before the pandemic. And we've got hundreds of thousands of small businessmen and women who have gone bankrupt or who never will reopen. We've got a toxic election, and I believe the election is going to be closer than the polls would indicate, especially with regard to the Electoral College. And with all the absentee voting, we could see maybe not knowing who the president is for 6 to 8 weeks after the election, and I don't think that'll be good for the stock market. And then you've got this possible stimulus, which I believe is actually needed. You've got a lot of people, through no fault of their own, are not going to get back to normal until after there's a safe and effective vaccine, until everybody gets vaccinated. And I think that's the reason, Neil, that you need to buckle up.
Yeah, I follow these futures contracts, Liz, not nearly as closely as you or Paul do, but I'm fascinated with the VIX contracts of volatility, index. You can look at the futures and see what people's sentiments are about where we're going to be. And that fear, that volatility extends right through the end of the year, judging from their priciness as they get pricier as the year goes out, is what I'm trying to say, which is a reflection of maybe something Paul touched on, that we won't know potentially the election results. He says 6 to 8 weeks. That seems to be confirmed in some of this VIX buying here. What do you make of that?
Well, I think that's exactly right. Paul's right. I mean, I would say the consensus now, which was not the case a few weeks ago, is A, the election may be very close, and B, because of all the problems with mail-in balloting and many states now extending the date through which votes will be counted, there's no way, or it's very unlikely anyway, that we're going to have results anytime soon. I think that's a mess, and I'm really sad that they've made these changes. It used to be pretty simple. You went on Election Day and you voted. And by the way, if you want your vote absolutely to get there, that's pretty good advice for this election. But I think that investors have so many uncertainties. I'm actually astonished that the market is doing as well as it is, and really it's because the economic numbers continue to surprise on the upside, whether it's employment or new housing. All kinds of data points keep coming in better than expected, Neil, and that is giving investors optimism that earnings, too, are going to be much better than expected.
Yeah, Pepsi might have been the first to telegraph that. What do you think on that, Paul, that the earnings might save the day? Certainly after the election, regardless of who we eventually find out won, the Fed will save the day, always be there as a sort of a backup. What do you think?
Well, I think earnings will come back, but if you look at everything, we're sort of slowing. I mean, there's no question that the economy is expanding and growing, but it's growing at a slower rate than it, say, did when we were just coming out of the severe lockdown. And again, we don't know whether this stimulus package is going to pass, and that's could create a lot of volatility. But on the good front is that if you look at the last few days, I believe the stock market believes that there will be a stimulus package, and they're betting on it. And it may take a few weeks, but I think in the end, the politicians, it's too negative for their jobs if we don't pass something.
All right, we'll watch very closely, guys. I want to thank you both very, very much. We're up about 80.